Good morning, everyone. It's Richard Kelly with Creekside Realty. Here today to discuss the real estate market in Silicon Valley and the impact of coronavirus on that market. These slides I'll go through relatively quickly because most of you have seen them before. There is a handout available at the tinyurl.com RE Market Graphs handout, and today's date 2020-06-20. Future meetings will be at the same basic URL with the date of 2020-06-27, which is the date for next Saturday. The archives, if you want to view these historically, is at the root URL, tinyurl.com/RE Market Graphs, plural. And I will be working on an upgrade background tutorial that is not available yet. Okay, same information, just with less clutter. And I do appreciate feedback. And I was also going to encourage people to send me a media article ahead of time, because there's a lot of media articles out there and definitions are critical, which is why I got involved in this. So if you see an article that's contradictory or complimentary of what I'm saying, send it to me and I'll explain the differences. One of the big differences is media talks about sales. Sales are in the media are almost always closings. I talk about offers and closings. The macro view is where I look at Santa Clara County and San Mateo County. I look at single family homes, condo, townhouses, all combined, but I'm only looking at it for a 7-day period that starts at 12:01 a.m. on Saturday and ends at 11:59 p.m. Friday. So the data we're going now is basically 7 days of data, and it's 9 hours old. And here we are, sold prices. You can basically see they're fairly flat. Week 10 is when shelter in place was announced. They had been going up. They've been relatively flat. The lowest one down here is the 10 percentile. This is the median that everybody quotes, and this is the 90. And that allows you to see what's happening at the upper end and the lower end of the marketplace, as well as in the middle of the marketplace. Here's looking at overbidding, and there's two keys. There's the frequency of overbidding down here, and it's just above 50%, which I consider to be a seller's marketplace. The amount of overbidding is the magnitude, and it's just below 101%, which is the threshold I use to go into a seller's marketplace. But more than half the sellers are getting slightly more than what they were asking for their properties in the last week. Here is looking at each component, days of unsold inventory. This is the number. The lower it is, the better, the hotter the marketplace is. This is a measure of how quickly it would take to sell all existing inventory if no new homes were coming on the marketplace. And you can see it shelter in place, it went skyrocketing up, and then it's come skyrocketing down. That's basically what they talk about, a V-shaped recovery. You might wonder why it was slowing down here before shelter in place. Actually, what happened there was some buyers backed out of a transaction and probably regret that they do at this point, unless they lost their job or something. So a higher number of transactions were canceled that were within a few weeks of closing escrow, and therefore the number of offers that happened in those 5 weeks decreased, causing the days of unsold inventory to go up. The gold line is the 5-year median. So I looked at the 5 years of 2019, 18, 17, 16, and 15, calculated the median of those 5 years, and plotted those down here on the gold line. And then the red line is the percentage. So you can see the week 24 that we're at right now, the blue line, the raw data, is saying that we're somewhere around 35 days of unsold inventory. The 5-year median is right at 35 days. So the percentage is right about 100%. Now we're looking at the total inventory available that doesn't have offers accepted. Again, the blue line is the data. So you're sitting here just somewhere between 2,000 and 2,250. It looks like about 2,175 if I was to take a guess. The gold number says that you should be right about the same, a little bit higher, around 2,250. So we're about 100%, 100 listings short, which is about 5%. So you come down to the red line and you read that off the right axis, and it says we're at about 95% of normal. And we drop down to 0 on week 25 because these are future days, so we don't have the data for that. The future exists for the 5-year median because those are all data points in the past. Moving on to the number of new listings. Normally we have up here somewhere around 600 new listings. We're only getting around 500 new listings. So that's about 80%. It looks like it's closer to about 84% of the number of new listings you would expect to get. And that is probably the biggest single story. Some sellers are not coming on the market and some buyers aren't coming on the market. But actually the ratio between the two, which in a free capitalist society is what determines future pricing, there are more sellers staying off the market than buyers, causing the demand to be higher. So the buyers trying to buy are feeling a lot of pressure, but the overall volume for the industry is actually down. Here's the number of new offers accepted, and you can see the same trend that I just was highlighting. The blue data point right back here is the number of offers that were accepted in the past week, and you can see that's about 433, picking a round number. Then the normal is somewhere around 450, so we're something like 17 transactions short, and 17 transactions on 500 turns out to be somewhere around 95% of the number of new offers that were accepted. Number of closings. Remember, it takes about 30 days to close a transaction. So any data involving closing, sale price to list price ratio is delayed by about 30 days. So you have the same sort of fee shape, but it's more spread out, and that's because the duration of escrows does vary, which is why the spread is more of the V is more gradual and broader, and also explains why the V is still climbing and will continue to climb because the sales have climbed. So it's the lag time between when an offer is accepted and escrows close that causes this V to be sharper than the previous V on offers accepted, and why it does not look as good. You know, because if you look at closings, we're only closing 65%, or maybe even less than that, 63% of what you would expect to be closing. And that's clearly not very good, but the offers, the pipeline coming in is basically getting very close to 100%. It's not there, but it's getting close. Number of new expired listings. Again, the data point is the blue line on week 24. We're sitting here right about 14 would be my guess. Normally, you're down here around 6. So we're quite a bit, we're a little over 200% of normal. So we're having a little bit more expirations. But you have to be careful, what does this really mean? And I would say it means absolutely nothing. It means absolutely nothing for 2 reasons. One, the number of properties that we're talking about at 14, when we're talking about something like, 2,000 homes on the market, is a drop in the bucket. But even more significantly, that is a little nuance on definitions. Right when shelter in place happened, there was a lot of withdrawals that happened. Those withdrawals stay withdrawn unless they go back on the market or until the expiration date occurs. When the expiration date shows up, they actually show up as a new expired listing. So some of these expired listings we're having here are actually getting double counted because of the rules of the MLS. They got counted as a withdrawal right at shelter in place, and now as the expiration date of the listing agreement arrives, they actually count as a new expired listing, which actually skews the data. And I think that's explains in part why the number is so high. Number of new cancellations. The blue is the data. You can see we're right here, week 24. We're somewhere right at 40 transactions. We're not normally somewhere around 43 transactions. So we're a little bit below the number of cancellations last week, and that looks like it's about 85%. Number of withdrawals, immediately you'll notice I don't have the 5-year median gold line or the red percentage line. That's because once a listing is withdrawn, it's a temporary status, and as I was just explaining, as the expiration date happens, it moves from withdrawn to expired, so there's no way to go back and get the historical data on the number of withdrawn listings. There's no way to compare it, unfortunately, unless you happen to get the data at the time, and withdrawn listings were never a concern until we hit something like the pandemic. So here are all the data points that we just talked about to the 5-year median, and the kinds of things you'll see is closings are way down, the number of listings is a little bit down, the number of new offers is the gray line, and it's down, but it's not down as much as the number of new listings, which is why the buyers that are out there looking are feeling more demand, more pressure. So now we're going to look at 13 micro markets. So the micro markets, we're going to look at overbidding, both the frequency and the magnitude, and we're going to look at days of unsold inventory. And I believe we have a brand new chart here, so I'll try to explain this. You're looking at the different micro markets down here, so you can pick what you like the most. Santa Clara County single family homes first, then San Mateo County single family homes second, and then condos, Santa Clara County, and then 2 areas in San Mateo County. And what we're looking at in this column is days of unsold inventory. And we're looking at the first column being before shelter in place and the current data as of Friday night at midnight or this morning at 12:01 a.m., depending on how you want to look at it. So red is a red hot seller's market, white is a balanced market, and blue is an ice cold marketplace. So if you look down this chart, you can see before shelter in place, there was an awful lot of red. And there's almost as much red now post, and you can actually see the raw data through the color. Then favors is what's happened. So there's some areas like the South County of Santa Clara County, Cupertino, Sunnyvale, and Saratoga, Los Gatos that are actually a hotter marketplace now post shelter in place or during shelter in place than they were before. There are also 2 areas that are cooler, not as hot, and those are the affordable areas are East San Jose, downtown San Jose, and South San Jose, as well as Los Altos and Palo Alto. And those are blue in color because they have slowed down. So in both cases, they're still a neutral market, but they went from a seller's marketplace to a neutral marketplace, which is why the trend is favoring a buyer. But a buyer is still not going to really, it's still not a buyer's marketplace. So that is what's going on in this column, this group of columns here. Then we move over to frequency of overbidding, and it's the same thing. The first column is where I rated the marketplace before shelter in place. The new column shows where I rate it now and whether that favors the seller, is the same, or favors the buyer. And here you'll see there's a lot more blue, and that's because I need the sold price to get the sale price, you know, if it was an overbid or an underbid, and that lags behind. So this is data, even though it's current, it's because of the lag feature, it's about 30 days older. So what's going to happen with these being more red in the favors column, these are going to turn more red, and even the current data is going to turn more red as we march through the next 30 days. Now we move on to the magnitude of overbidding. This is just how much are the buyers willing to overpay. And almost across the board, if you look over in the third column, is it's favoring the buyers. So basically, buyers that are out there are being more conservative. Yes, they're overbidding. Yes, they're overbidding at about the same rate. But instead of bidding 110% over, they're only bidding 107% over. And so they're more conservative, and that seems to happen every time there's a little bit of a crash or a big crash in the real estate marketplace. And then finally, what a lot of people focus on is pricing. And here you have the price in the different micro market areas before shelter in place, what the current price is, and whether it favored the seller, which means the prices went up, or it favored the buyer, which means prices went down. And in general, they favored the seller. And again, this data is lagging behind. So in 30 days from now, I suspect that this was going to be pretty much solid red. So people that were expecting prices to drop with shelter in place, that clearly has not happened yet. Whether it will happen in the future or not is a $60 million question. I don't see it happening in the next month or two at the earliest. And the reason I feel somewhat comfortable saying that is the demand that the buyers are feeling is continuing to increase, which will tend to continue to raise the price. And then it takes a while for buyers to shift gears. So even if the market really changed starting today, the buyers wouldn't sense a change for about 30 days. And then you have the 30 days for that to work through the system, plus a 30-day close of escrow. So we're at least conservatively, in my opinion, 2 months of flat to increasing prices with no indication that they're going to be going down. Here is my micro markets maps. This is looking at the amount of overbidding. So this is lagging behind. This is single family homes in a different geographical area, but you can see that most of the areas is red. There is some neutral, which in this case is gray, and some cool, which is blue. And again, I've gone back in time. So this is May 23rd, and it's actually 30 days old from May 23rd, and that's because of the length of time to close escrow. So we're looking at data that's basically that was generated before we could even show occupied properties, and we were still in a very hot marketplace, and that was based on being able to show vacant properties. Now I'll step through each week. So here's the 30th, here is June 6th, here is June 13th, and here is June 20th. Now, if you look, those last three slides didn't change because there hasn't been any change in the closed data, and that's because of that spreading out of the U that we talked about, or the spreading out of the V. It's not a U, it's a V. The offers is much sharper because it responds more instantaneously, and the close of escrows is more of a broader V, but it's still clearly a V versus a U. Now what we're going to do is shift to days of unsold inventory. So we've gone from data that relied on needed sale price to data that doesn't need sale price, inventory available versus number of offers. So you can see back on May 23rd, a good part of Silicon Valley was already back into a hot marketplace. And now we'll just step forward week after week. So here is May 30th. Now what you'll notice here, the big change was the blue in San Mateo County disappeared in the expensive areas. We got a little bit more red. Red shifted north a little bit. And the 13th and the 20th were the same because although the market has tended to improve, they haven't shifted from 45 days of unsold inventory to 39 days where they cross over my threshold of 40. So the last 2 weeks of unsold inventory has been unchanged based on this graph. You can see the marketplace is 100% in a red hot marketplace or a balanced marketplace. There is no buyer market conditions area. What is interesting, in my opinion, is it's the lower priced areas here and in Redwood City and the expensive areas that are doing the worst. The more moderate priced in both counties are basically in a seller's marketplace, and buyers are having to compete for those listings. Okay, we're now moving on to looking at the individual components, and the first component we'll look at is days of unsold inventory in the 22 different micro market areas. And you can see Santa Clara County in the red, but it's difficult to see. So we'll move to the next slide, which shows you the three counties. Santa Clara County in the red, San Mateo County single family homes in the gray, and Santa Clara County condo townhouses in the yellow. Basically, you can see that prior to shelter in place, we were basically at real low numbers. Anything under 40 is a red hot seller's marketplace. You can see we were between about 38 for San Mateo County, down to probably about 29, 30 for Santa Clara County, both single family and condo townhouses. And then shelter in place was announced, and you can see fairly shortly afterwards, it started racing upwards and got all the way up to about 95 days for condo townhouses, about 70, 75 days for San Mateo County, and only about 65, 70 days for Santa Clara County single family homes. But you can see the trend is down. You can also see my plateaus here. And the first plateau is for a 3-week estimate, and the second plateau is for a 1-week estimate. And I will take a moment out to explain that I think I finally understand what's causing the discrepancies in the last couple weeks on these. And that is, when you're looking at 5 weeks, 1 day of data is not that significant. When you start looking at 3 weeks, it becomes more significant. And when you look at 1 week, 7 days, 1 day of data becomes very significant. And what that boils down to is by looking at the data at midnight on Friday, any sales that were reported Saturday for Friday weren't involved in my statistics. So what I did to get these timeframes more accurately is I'm backing it up 1 day for the 3-day week. And that means that instead of starting on Saturday and going to Friday, I backed it up a day and I'm going from Friday back to Thursday after going through 3 weeks. On the 1 week data, I backed it up 2 days. So I backed it up from Friday to Thursday and then from Thursday to Wednesday. So that data goes from Thursday morning through Wednesday of the past week. So people would have had transactions that are on Thursday and Friday of this past week are not included on this data, but I think that will make the data a better indicator going forward. In both cases, they're whole weeks, but because people haven't had an opportunity to report the sales, I backed up the time frame. I didn't want to do that for the 5-week data because I wanted to get the whole week cycle, and you get the bulk of the data, but you don't get all of it. So I hope that makes some sense. Skipping through to the other pages, here's Santa Clara County micromarket areas, here is San Mateo County, and here is condo townhouses in both San Mateo and Santa Clara County. Moving on to available inventories. Now, a fine distinction here in my definition, these are only inventory that's available with no underlying contract. So a pending continue to show is not counted in my inventory, but it is counted in the MLS inventory. You can see Santa Clara County is the highest number because it's got the largest area and number of homes. You can see, coincidentally, San Mateo County and Santa Clara County townhouses are basically on top of one another, just a coincidence. And then you can see the other 19 micromarket areas from the smallest up to the largest. And that way you can see the data. Stepping through, here's the county data, Santa Clara County, San Mateo County, condo townhouses in both counties. Moving on to the next component. This is the number of offers accepted in the past 5 weeks. Same concept, Santa Clara County, San Mateo County, and Santa Clara County condos are essentially on top of one another. You can see before shelter in place, the San Mateo County single families were a smaller amount. Afterwards, they're a larger amount compared to the Santa Clara County condos. Moving through the different components, that's the 3 county-wide measurements: Santa Clara County only, San Mateo County only, and townhouse condo in both counties. The next one, of course, is closings, and this is the last raw count. So again, Santa Clara County being the largest. If you look at San Mateo County, it was below condo townhouses. Post shelter in place, it's raising above condos and townhouses. So that would tend to say that the volume for condos and townhouses are slower to recover. I want to do a ratio between several different data points, but that's just comparing to San Mateo County. Here is the different county areas. Here is Santa Clara County micromarkets, San Mateo County, and condo and townhouses in both counties. Now we have frequency of overbidding. This is how often sellers are getting more than their asking price. And again, you can see the red line for Santa Clara County, but again, it gets pretty buried. So we will talk about it at the county level. So you can see before shelter in place was going up. Because this relies on closings, which are delayed by about 30 days, it continued to rise for about, say, 3 weeks after shelter in place. Then it plateaued for about 2 weeks, and then it basically started to come down. You can also see this is much more of a U-shaped and a spread out, or probably more accurately, a very wide V. And that's just because the offers are dictated by market conditions, so they respond, which is why you have a much sharper V. On close of escrows, your escrows are different durations, so it spreads out the impact. Moving on to Santa Clara County micromarkets, San Mateo County, condo townhouses in both counties. And now this is the magnitude of overbidding. And again, I'll look at it at the county level. So here it is at the county level. You can see the same pattern. It was going up before shelter in place. It continued to go up after shelter in place, sort of leveled off, and then it started to decline. It's down, and it's basically at the flat part. You could argue that it's going up ever so slightly, at least for condo townhouses. Santa Clara looks really pretty flat. San Mateo County looks pretty flat. But because this offers has already gone back up, and this is delayed by about 30 days, I am very confident that this data will start trending upwards fairly shortly. Moving on to Santa Clara County micromarkets, San Mateo County, condo townhouses in both counties. And I am stepping through that quick. I expect you to pause and look if you're interested in the breakdown. Now we're looking at the sold prices. And unlike most people, I look at the 10 percentile, which is the cheapest 10% homes in a given area, instead of just the median or the middle of the market. So here it is on the county, so you can see it. Basically, townhouses is basically pretty flat. Santa Clara County, it clearly went up right about the time shelter in place was being announced, and it was plateaued. You could argue it's come back down a little bit, and that probably happened when we weren't able to show properties. Now that we're 30 days into it, I'd expect this to turn around and start going up. San Mateo County did sort of the similar pattern. It clearly went up. It went up probably more than Santa Clara County. Then it's come down, but it's sort of already rebounded. So it's, you know, it hit its bottom and went back up. I would say Santa Clara County is still at its bottom, but based on sales activity, offer accepted activity, I expect both of these to start increasing very shortly. Moving on to Santa Clara County micromarket data. San Mateo County, condo townhouse in both counties. And now we move on to the median price. And I'll go right to the countywide data. This is what the median price is doing instead of the bottom sheet and most affordable 10%. And here you can see the middle of the market was down around 1.2 million, shot up in Santa Clara County to about 1.4, it stayed there. And, you know, it's not that far off of 1.4, you know, maybe 1.35 or something of that order. San Mateo County, on the other hand, went all the way up to 1.8 from a base of probably about 1.4. Then it came down to about 1.6, and now it's already back up to about 1.75. Clearly a little bit more fluctuation in San Mateo County. It is a smaller county. It is a little unusual based on how big the county is that we're having that kind of fluctuation, but there it is for you. Moving on to Santa Clara County's micromarket areas, San Mateo County, and condo townhouses in both counties. The next one is the 90th percentile. This is the most expensive homes in the different micromarket areas. Here it is on the county level, so you can see Santa Clara County was down around 2.5 million, shot up and hit right at 3 million. It just hit right as shelter in place was announced, rapidly came down to like 2.9. And it's been basically staying at 2, well, that's actually more like 275. Sorry, it's not 2.9, 275, up from about 2.5 million. San Mateo County went from 3 million, got up to 3.65 maybe. Then it got all the way back down to 3 million. But look at this, it's now up at 4 million. So the more expensive homes in San County, homes are getting more expensive, or we're having more high-end homes selling, which is, I think, what's really happening. And I think the biggest reason for that is not that there's more activity now, but there was very little activity before shelter in place for whatever reason. Here is the data for Santa Clara County, San Mateo County, condo townhouses in both counties, and moving on to duration of escrow. Again, it's hard to tell, so we'll go here, county data. Basically, you can see San Mateo was the fastest, shortest escrows at about 25 days. All of them have bottomed out, came back up now to about 30 days. San Mateo County is hitting right at 29, but still up from 25. Santa Clara was probably sitting here at 27, up also up to 30. Condo townhouses was 28 and up to 30. So not a big deal. People, it really doesn't matter whether you close in 25 or 30 days. I actually prefer slightly longer escrow so they're more predictable. Moving on to Santa Clara County data, San Mateo County, condo townhouses for both counties. Moving on to the next thing, which is days on market. Here's the county data. Now, an astute person will say, wow, here's shelter in place and the data went down. Why is that? And the reason for that is the MLS came along and froze days on market. So you could actually, what this indicates when they're all down at zero, that says that more than 50% of the homes that we're selling, well, we're actually closing, had come on the market after shelter in place was announced and the days were zero. That's why this number is climbing up. It's not because the market is slowing down, but simply that they're letting the counter clock start now. Each one of the micro markets in Santa Clara County, San Mateo County, and I am missing the condo townhouse still, so I will add that. So now we shift to yet another thing, and this is days of unsold inventory. Well, this is all my data for June 20th, so as of this morning, and this is based on this first page is Santa Clara County single-family homes in the different micro market areas, each one of the different components, and this data is based on 5 weeks of data. So you can look at whatever data is the most interesting for you and get the exact number. And you know, the key ones are days of unsold inventory. The frequency of overbidding is actually this column, 61. The magnitude of overbidding is this column of 100.5. The prices is here. You can look at anything that's of interest to you. The second page is San Mateo County single family homes. And I have some room on this page, so I have the definitions down here at the bottom. And then we move on to condo townhouses in both counties. And with that, we move on to monthly data. And we're not going to go into monthly data this week, because we did that last week, the second Saturday of each month, but it's here so you can quickly reference. It goes back, as you can see, to 2001. Some of the dates up here start out. I'll try to make them a little wider so they fit. But basically, this is the month of May, and it is a little more convoluted because here my months were 35 days, 5 weeks, starting on the first of the month, going for 5 weeks. Between these two gaps, it was a 30-day month, trying to start on the first of the month, but you couldn't always start on the first of the month. I actually started on a Saturday, around the first of the month, went for 4 weeks plus the 5th weekend to get to 30 days. And I was trying to get away from the statistical fluctuation of calendar months. And this was my first iteration of it. You can see it went on for 7 years, and now for the last 2 years, for offers and closings, I'm using a moving 35-day period. For the daily data, it ends on the date before, so like June 20th data that we just saw in that other table ended on June 19th and goes back 35 days. For monthly data, I start on the first of the month and come forward 35 days. A little confusing, but I think it gives us the best accurate information, the data that's the most statistically meaningful for just making real estate decisions. And that's basically a recap. Just go through this real quickly. Here is where I'm explaining what the data is a little bit, some key dates in the real estate marketplace. And then if you want to join me next week, you should be able to join me at tinyurl/RE market graphs plural, the date code 2020-06-27. If you drop the date code, the 8-digit date code, you get to the archive, or you can type out this long URL if you want, or you can go to the meeting code of right here and use this password. The phone password is here, and this should be good through August 8th. The handouts are not yet posted, but will be by the time this is archived and posted. And next week will be the 6/27. Very open to comments and questions. And as I said at the beginning of the meeting, if you have a newspaper article that is confusing, especially between my data and the newspaper article, send me the link ahead of time and I'll look at it and try to address it. Recently, this past week, there was an article about sales. The media, when they're talking about sales, are closings, and that's why I try to use the word offers accepted and closings to make it clear what I'm talking about, because for most people in this real estate industry, a sale is the time frame when the offer is accepted, not when the transaction is closing. And definitions make a huge difference in the outcome. And then I just go into the data, and I won't step through this. Actually, I'll just step through it real quickly, but it's also available in last week's data point. And if anybody has any questions, go ahead and unmic themselves and ask away. Otherwise, I'll step through these relatively quickly and then terminate the meeting and get it posted for you.